Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, October 13th. Hope you had a great weekend. We have got a big show planned for you today. OpenAI and Broadcom are announcing a major chip deal over the next 4 years. Our cloud reporter will be up very shortly to put up the news in context. The Chief Marketing Officer of Amazon Web Services is coming on in just a few minutes, so do not go anywhere. I'm excited for that conversation. We are also talking about the tokenization of real-world assets, which frankly is something I'm really trying to wrap my head around, and so I'm excited for that chat. After that, we're going to be talking about the AI talent wars with someone who has built a big business in the land of executive search. And finally, we have got a great story about how Salesforce, Google, and Microsoft are planning their AI-powered ad tech push. There is a lot to get to, so let's get right into our first guest. OpenAI and Broadcom are teaming up. They announced a plan to roll out 10 gigawatts of custom AI chips over the next 4 years. Here to put the news into context is Anisa Gardezi, our cloud and compute reporter here at The Information. Anisa, it's a busy morning. How you doing?
I'm doing well. Happy to be here, Akash.
So let's talk about another chip deal that OpenAI has done with another chip company. Give us the details of what we know, and then we'll talk about the bigger picture here.
This morning, OpenAI and Broadcom announced a major partnership to deploy 10 gigawatts of custom AI chips for OpenAI. And it was broadly known within the industry that OpenAI was working with Broadcom on its own chip effort to help reduce its reliance on NVIDIA. But I think, the company is publicly talking about it today and putting a figure on it, 10 gigawatts over 4 years, really shows how serious the two companies are. And, OpenAI does need to raise a lot of money for this effort. So I think we should expect maybe, the next couple of Mondays we might be on TITV talking about them.
And it's kind of funny because over the last couple of weeks, as we've seen OpenAI do a deal with NVIDIA, or NVIDIA announcing its letter of intent to invest more money into OpenAI, then we saw the OpenAI AMD deal. I mean, the question that we kept asking folks is, well, what does this mean for OpenAI's own chip efforts? Because we knew that they were going to be working on their own chip. And I guess this is sort of the closest look we've had at saying, yeah, we're doing it, and we're doing it in a big way with Broadcom as well.
Right. I mean, 10 gigawatts really isn't a joke. And that's the exact amount of the, strategic partnership between OpenAI and NVIDIA. Of course, OpenAI expects to get NVIDIA chips through other deals. But, given that this now internal chip effort is the same size as the strategic partnership, I think it really puts into the context how much OpenAI does not want to be reliant on one company or even two companies. They sort of want many companies helping them reach their compute goals.
And Jensen can't be happy about that.
My guess is not really, especially given the way that this was announced today. I think the main takeaway was that, OpenAI and Broadcom are not just working on a chip, they're working on the entire data center system, including networking and other things you need to run a system.
Right.
And that is sort of NVIDIA's pitch. They always say that we do more than just building a chip. And so today, that is kind of what Broadcom announced as well.
And this is one of the things that we've talked about on the show, is that Broadcom has sort of some of those products that help build out sort of that full data center infrastructure. It's not just the chip itself.
Exactly. And I think that's probably why OpenAI was drawn to a partner like Broadcom. Of course, we'll have to see how this all shakes out. We haven't really seen any examples of these Broadcom chips in action yet. So, with all these announcements, we're going to have to see what happens. But the intent is very clear.
Right. As you're looking for this story to develop further, what are you watching for?
Well, one thing that we noticed this morning was Broadcom's president was on TV this morning talking with Greg Brockman, and he was asked the question, "Oh, well, is this your $10 billion customer that CEO Hock Tan talked about on the last earnings call?" And he kind of made it seem like OpenAI was not that $10 billion customer. So definitely one of the big questions today is that true? And who is the $10 billion customer? Because Broadcom might have another relationship that they aren't publicly talking about that is still going to be important.
Right. Well, Anisa, thank you so much for coming on short notice. That is the beauty of breaking news. We look forward to having you back on as we see more of the developments in the story playing out. That is Anisa Gardezi, our cloud and compute reporter here on TITV. Okay, Amazon Web Services made big news last week with a new suite of enterprise-focused AI tools that could challenge the traction of fast-growing enterprise search companies like Glean. Some of AWS's tools are new, but some of them are also kind of a repackaging of older AI tools that it's already had in the market. Of course, AWS also has a lot more under the hood with its cloud business and its own chip efforts, but never before has there been more competition on both those fronts. And so I want to bring on Julia White, the Chief Marketing Officer of AWS. It is her first time on the show. Welcome, Julia. It's great to have you.
Well, so great to be here, Akash. Thank you.
So I'm excited to talk about some of the announcement you guys made last week. One of the fundamental questions I do have is you guys unveiled QuickSuite. How is QuickSuite different from Q, which is another product that we talked a lot about here at the information?
Well, QuickSuite really builds on the learning we've gotten from Cube for Business, as well as QuickSight, as you also alluded to. And then it really germinated from watching our internal employees and the tools they were using and the needs that they had. And we brought all that together. And as you know better than anyone, right, the space is moving fast. And so our ability to really watch, learn, pivot, and adapt and bring them into a cohesive experience, as we call Amazon QuickSuite, is really the evolution that we're bringing to market this week.
So does Q fit inside QuickSuite, or how does that work?
It's really the next generation. So our Q Business customers are being evolved into the QuickSuite
Okay.
application. So it takes over those capabilities. Of course, if you're on Q Business, as we do with any enterprise, we continue to support that. But really, it is the evolution of that, and it will replace it in the fullness of time.
Well, one of our reporters wrote about it last week, and one of the things he mentioned is it felt a little bit more like a rebranding than an introduction of new products. Do you not see it that way?
Well, we bring a lot together that is brand new. For example, we have like industry leading quick research, which is one of the capabilities in it, where you can go deep, and understand what's happening across a whole industry sector, or put a whole strategy together for you, as an example. But then the entire user experience and the application experience itself is new. And kind of, again, germinated out of watching our internal customers as well as our external customers and bringing those pieces together.
Hmm. One of the neat parts of QuickSuite is sort of the enterprise search tool and the ability to use this product across all of your other software that you have installed. It's something that we've talked about in the show in the context of fast-growing startups like Glean. One of the challenges that we've written about here at the information is this idea that some software companies may block or may throttle access to their own to the data that's hosted inside their own programs from AI companies who are looking to access them. This is the whole issue around corporate data wars. I mean, how much of a challenge is that for you right now?
Well, we've had in market our index. It's now part of the Quick Suite again, Quick Index, that is enabling customers, ourselves and others, to tap into things like Salesforce and Slack and third party, and obviously all of the data sitting in AWS, which is where most of the world's data actually sits. So we have access to all of that. But then the new aspect of it as well is also your own personal information, like Microsoft 365, your docs, your PowerPoint, your email. And we don't see, in terms of we're using public APIs, we're working in partnership with these organizations. And so to your point of, we don't see that on the horizon, but understand the concerns.
Understand the concerns, and so, but you're saying that you don't foresee it being an issue, even though it could be one way it goes.
I think we're doing it in partnership with so many of these companies again, and so many of them are customers and partners with AWS as well, and so very much doing it in partnership with them.
Right. I want to talk about the ROI that some businesses are trying to get out of AI. It's something that has been difficult for some businesses, given that these projects can be expensive, and also you might not know the right ways in which to use the technology. And agents are specifically one area of AI where people have kind of been scratching their heads saying, hey, I'm trying it and it's slow. I mean, I'm not seeing the impact just yet. Are your customers actually seeing ROI, or are these all just sort of pilot projects that they're just playing with the technology right now?
But we've definitely seen the kind of, as people call it, the pilot purgatory, right? And I think that's why we made the learnings we've had, again, that we've been able to watch, learn, pivot with QuickSuite. The getting it up and started is like zero friction, right? So as a user, you already have your data set up to the extent your organizations put that in place. But you can also just immediately bring in, again, your documents, your access to BI dashboards, even information sitting in like Snowflake. And so the user can get moving very, very quickly, which again gets you out of just I'm stuck in pilot and I'm actually can use it in a real world way, right? These tools get access to all the business data. You're not just trying to work around it, which is usually the problem of getting ROI. So again, just within my own organization, we now run every marketing review using Quick Suite because the team can pull everything together instantly. We know what kind of insights we're looking for, and then it can put it into a review for all of us to share. So then you're now measuring from an ROI perspective. Okay, if my team now takes half the time to get their business review pulled together, what's the value of that? And their ability to go instead work on another marketing campaign using those insights versus that 2 hours to actually just find the insights.
Right. But as you're talking to customers, I mean, what is the biggest challenge that they have, or what is the biggest factor that is preventing them from spending more on AI right now?
Mostly it is about, it's interesting, it's such an old world problem, but about data silos, right? And that's what slows down the benefit of so many of these tools is getting access to the right data, bringing it together, making it useful. And so again, one of the things we spent so much time on was quick index, making sure that the data silos could be harmonized. And again, take a different approach, right? A lot of the other people in this space are doing it application specific or data silo specific kind of agentic experiences where we looked very broadly again taking from our history of being of AWS and a broad set of infrastructure and data systems that we could bring that forward into the application layer as well because that's what slows people down and that's what makes it not as useful and where the ROI struggles when you can't get access to the right data.
Right. AWS has its own tools to help people develop their own agents. We also saw last week OpenAI unveil a similar tool in that category. What did you make of their release last week?
I think the agentic space is moving incredibly fast. I think we're going to see a lot of experimenting and then continuing to evolve. And as you've seen us bring out, Kiro, our agentic IDE for developers, and seeing really, really wonderful success in terms of adoption with developers and what they're doing with it. Now with Quick Suite for all of the employees and users at organization, and then even just today, our new agentic platform called Bedrock Agent Core is in GA. So all the different tools, whether you're a developer, whether you're building out the whole infrastructure for agentic systems, or you're an end user, kind of covering all those different bases.
Right. And one of the other things that we've written about here at the information is sort of the margin pressure that comes up for cloud providers, given how expensive some of the underlying technology can be for renting out these AI chips. How are you guys seeing any of that margin pressure in your own business?
Our business continues to be quite healthy, and as you see in our earnings, and kind of the way we look at it and report, it continues to be quite steady.
And what about the Trainium chip that you guys have? It's an interest. I mean, we were just talking earlier on the segment before you about OpenAI's own ambitions to develop their own chip. It's something that we were waiting for more details on. Of course, Amazon has had this effort going for a long time. Can you talk about the extent to which AWS customers are actually asking to say, "Hey, we want to use that chip," or we want to use the compute associated with that chip instead of something like NVIDIA, which they might have been used to doing for the last 2-3 years? Are they actually making the ask to transfer right now?
Well, as you said, I think our investment, our long-term investment in our own chips, with Trainium being kind of the most current example, is really a wonderful advantage for us, right, from a price performance perspective. And so if you just look at our customers using Bedrock, right, our AI platform, over half of that is powered by Trainium. So over the half of customers of many, many that are using Bedrock are already using that as well. And then our big, big investment called Project Rainier, our super AI kind of build out in partnership with Anthropic, also powered largely by Trainium as well. And so I think proof's in the pudding in terms of seeing Trainium pay off and the price performance we can provide. Of course, by the way, we're wonderful partners with NVIDIA. We host more of their chips than anyone, but it's an opportunity for customers to have variations.
Right. And I mean, I just wondered if internally the company had a goal in saying, I think I just missed that detail. You said half of Bedrock customers are using.
Over half of Bedrock is powered by Trainium, right? So
Okay.
by definition, then half the customers using Bedrock are powered by Trainium.
Right. Great. Well, Julia, I want to thank you for coming on the show. It was an exciting week of news last week, and it very much is something that we've been interested to see how it plays out. Thank you for coming on the show. We appreciate it. And as you have more news, please come back on the show and tell us more about it. That is Julia White, the Vice President and Chief Marketing Officer at AWS here on TITV. We have talked a lot on this show about ways in which AI is changing the advertising landscape. It also means big changes are coming for the ad tech sector. Today, The Information published a story not just about how existing ad tech giants like Google and Amazon are using AI, but also about how other big tech companies like Salesforce and Microsoft are getting into the game. I want to bring on Catherine Perloff, our advertising reporter, to tell us more about the story that she wrote. And also joining us in the conversation is Robert Webster, CEO of Tau Marketing Solutions. Catherine and Robert, it's great to have you both on the show. Welcome to TITV.
Yeah, thank you. Great to be here.
So, Catherine, let's talk about this story that you wrote. You know, one of the things that we've talked about is sort of the marketplace for ads altogether. And this was kind of an interesting story because this is a story one level up. It's about how companies are sort of planning and evaluating these advertising campaigns that they do. And so tell us a little bit about some of the challenges that exist with respect to people planning these campaigns. I mean, you've got so many different platforms. What are some of the challenges?
Yeah, so the system for buying ads, is very complicated. There's a ton of different technologies involved, especially if you want to buy ads on the web or on TV. There's a whole different system of different ad technologies you have to use. The other challenge is, it's typically seen as a little bit easier to buy ads on like Meta or YouTube, but it's very hard to compare the effectiveness of campaigns across those channels because, Google might use different metrics or count things differently than Meta. So it's very hard to sort of know where exactly you should put your dollars and how well the campaign worked, which then sort of is like a loop because, if one campaign worked, then you should spend more money in that channel. So it's very hard to kind of plan across the top. And AI, agentic agents can help sort of simplify some of that potentially by
Right.
creating an easier workflow and being able to be smarter about making decisions about the data.
But one of the interesting things that you reported is despite how many big tech companies are in the advertising game, there actually seems to be a movement here where even more tech companies like Salesforce that I have never associated with advertising, they are also looking into getting into this space. How are they looking to do that? Tell us about what you found.
Yeah, so Salesforce, to be clear, has been in the marketing space before, but it's been more sort of like, they've had some media analysis capabilities, but their kind of main bread and butter that most marketers know them for is email marketing and then like storing your data, which is obviously very related to their core business of just like storing customer information. And I think that, with their new kind of, they have this agent force technology that they've been pushing recently. And with that technology, it doesn't just analyze which campaigns are working and which aren't, and maybe do that in a more sophisticated way, but it also can take an action for you. So if
Hmm.
your Google campaign isn't working, it can go ahead and like stop it. And I think this kind of technology, like it's kind of jargony, but there's kind of been two different sets of tech in the industry, MarTech and ad tech.
Hmm.
MarTech being sort of this more just sort of storing your information, maybe your customer information, sending them emails, sending them texts. And I think with AI, that distinction from ad tech, which is more about executing on media, is sort
Right.
of collapsing a little bit. And I think this is a story we're seeing across enterprise technology that AI is sort of bleeding these distinctions between different types of companies. And we're seeing that kind of in the advertising space as well, which means more different players can get involved.
Hmm. Robert, how are your clients thinking about using AI in the context of this story?
Yeah, so I think as Catherine has said, it's about how you bring data together to make more holistic decisions, and a lot of it is around how do you drive efficiencies. Yeah, how can you remove a lot of that busy work that has to happen that takes a long time, and how do you actually use your talent to do more creative, better work? So the objective here really is definitely an efficiency saving on time, but also driving better results. Yeah,
Hmm.
we mentioned people like Salesforce, also people like Adobe getting into this space. When you've got customer data also being used to make advertising decisions, that's just going to drive better results, but
Right.
also done in a very safe fashion.
And I'm curious, one of the things that we've been talking a lot on the show is the ROI that comes with using AI and agents. And it's something that businesses are really trying to find, really, given that AI in many cases can be very expensive, and the cost savings, the revenue uplift, it can be a little bit vague in some cases. Are you seeing, really tactical ROI that is coming from using these agents in the advertising space, or is it still sort of, hey, we're just trying to figure out how to use it in the first place?
No, the ROI is here now. Well, you've got to think the agents have already really been ready for about 12 months, and marketing workflows are quite specialized. It's quite a bespoke sort of skill set with some awful lot of industry jargon, and in the past required experience. So if agents have been ready and available for a year, it's probably taken most of this year to get them used. But you're now seeing early adopters getting big returns on efficiency, but also ROI on this.
Hmm.
And I think
Talk about where is that ROI coming from?
well, so if you're trying to make analytical decisions now, you can make better decisions faster.
Hmm.
In a world, let's say you're trying to plan all the media you want to buy. I haven't met a planner yet who knows TV, search, Meta, TikTok, all equally well, and equally is able to use all of the data sets equally well across the top. Then also make that global. Let's say imagine you're making a decision globally about how to run all your media in like 50 markets. No human can do that. But an AI with a great human alongside them can do that in 10% of the time to a higher degree of accuracy.
Catherine, I want to end with you here. Google is a giant in this space. Second to Google, who is the company closest on their tail right now? And talk about that ROI point that Robert was talking about here, because I think it's important. If Robert is saying, hey, the ROI is here, this is actually something, it's an enterprise use case of AI that we haven't really talked about as much. It might be the low-hanging fruit, something that we should be paying more attention to.
Yeah. Google, I guess in ad tech, Google probably is the leader. Amazon has been catching up to them this year. It's been a priority. There's some other smaller firms that are well known and well used in the industry, like the Trade Desk. But in terms of this sort of new area for media planning with AI, I think that this is a capability that hasn't really um been as much a focus for tech. Maybe it's maybe been like I don't know if Robert, what you think here, but like it seems like it's been something more kind of like that agencies and ad buyers would just do themselves. So I think it's just adding a new layer where tech companies compete, and I don't think that there is a clear winner right now.
Right.
That's why it's kind of exciting to see. um in terms of return on investment, I mean, I think that yeah, the sort of like classic marketing adage that has been said throughout history, or I don't know, maybe the past 20th century, is like, I know 50% of my budget work, but I don't know which 50%. And I think that there was a promise of technology to solve that, because now we know who's looking at the ads and we can trace that to the purchases. It's honestly made it a lot more complicated because there's way more channels. People aren't just watching one TV show anymore. Like the media ecosystem is really complicated. The data
Right.
is really complicated. And I don't know if we're actually closer with all this technology to answering that question, which ad actually drove spend. And I think there's a lot of wasted spend going on right now because marketers don't really know where to put their money. So there's a lot of potential for gain if we can really answer this question. I mean,
Right.
some of it I think is a little bit like, how do you really measure if something is persuasive? Some of it might not really be possible. I think some of it's kind of outside of the realm of science and technology, but I think some of it we could really measure a lot better. And I
Right.
think that's why this is interesting.
Well, look, it's a fascinating space, and it's an application of AI that I don't think we talk enough about on this show. And so I'm excited to have you both back on in the coming weeks and months as the story develops to talk more about this. Thank you, Catherine, and thank you, Robert, for joining us. That is Catherine from The Information and Robert from Tau Marketing Solutions here on TITV. Okay. When the crypto sector isn't talking about stablecoins these days, real world tokenization is another idea that has everybody energized. We're going to get into what this concept actually means in a second, but more and more companies have started to build products in this category, not the least of which is Robinhood. Securitize is another company in the arena. The company is reportedly considering going public through a SPAC at a $1 billion valuation, according to Bloomberg. I want to bring on founder and CEO Carlos Domingo to talk about where he sees his business going. Carlos, welcome to TITV. It's great to have you.
Yeah, thanks for inviting me. It's my pleasure to be here.
So I'm excited to talk to you about this business of real world tokenization. I do want to start with the news though. So Bloomberg has a report out saying that you are looking to go public through a SPAC at a $1 billion valuation. Is the Bloomberg report true?
I cannot comment on that. The only thing I can say is that the industry has been exploding and has been, for the largest player and the one that has been around for the longest, we've been benefiting greatly from that. And obviously, public markets are very open. The Circle IPO was amazing, and
right.
Then Bullish and many other companies went public. So we're considering all the options.
So okay, so you are not going public in the near future.
I can't comment on
you are going public.
Public disinformation. So.
Okay. Well, but I do want to talk broadly about the trajectory of the company. I mean, as you see sort of this decision possibly coming down the line, whether or not to go public or not. I mean, how do you think about the different trajectories your business could take and the different options of going public? I mean, we saw Coinbase chose one route. We also have the SPAC route, and then we have the IPO, which seems to be like. It's boring, So how do you think about the different options there?
I think that the first, there's two things, right? One is the decision to go public or not, that every company needs to analyze their own, particular situation, etc. But, look, I'm older than you, obviously, and I remember the times when going public was the goal of most companies, right? And companies like Amazon went public when they were very small, like a couple of 100 million market cap or 200 million, etc. And somehow throughout the way, it just became that everybody stayed private for as long as possible.
Mm-hmm.
So I think that, with more avenues to go public, as you mentioned, SPACs and which are back from the 2021 time and direct IPOs like Coinbase did, or just traditional IPOs. I think there's more options for companies now. And,
right.
Obviously being public, you have the ability to tap capital markets, provide transparency towards your financials, etc. So, but obviously every company needs to do their own analysis. And in terms of what's the right mechanism, I would say that the mechanism, as far as you execute it correctly, doesn't matter. Like what it matters for a company when it goes public is how do they perform after, right? So first, they go public and how they perform after. 2021, a lot of companies that maybe shouldn't have been public went public and have.
And that's sort of why the part of the report that surprised me most was that the SPAC part of this. I mean, I think we saw the SPAC era come and go. We're seeing it come back into the conversation. How do you think about the SPAC as a mechanism of going public?
I think that, look, many companies that went public in 2021, whether they did SPACs or they did IPOs, some of them have performed very well. Some of them have underperformed, right? So the mechanism shouldn't be the deciding factor for going public or not. Every company should just analyze what's best for them. I don't have anything particularly in favor against IPOs or SPACs. I just think that different mechanisms to go public, and what you do after is what matters.
So let's talk about the fundamentals of the business. You are in the business of real world tokenization. Explain to everyone what it is Securitize does and how you fit into that story.
So you can think of us as a service provider for, taking, real world assets, which for the most part is either, funds or equities or bonds, etc., and then bring them into this new ledger technology called a blockchain to be able to manifest a lot of the advantages of this very, modern ledger technology. Everything in capital markets is about updating ledgers, right? So you buy a stock, somebody needs to update the ledger saying the stock has changed hands, and they need to send money, and they need to update the ledger of the cash, etc. So ledgers are very antiquated in the industry, and they're disconnected with each other. So blockchain has a massive promise of like being this public distributed, cryptographically secure ledger where capital markets can be modernized, and that's essentially what we do.
Right. So one of the things you've talked about in previous interviews is this idea that, look, the infrastructure on which the financial system is built, it is old, it is outdated. There is certainly an argument for updating that. Maybe blockchain plays a role in that. The question I want to ask you is why it's beneficial to move towards tokenization, for example, from the customer and the consumer's perspective. I mean, we've heard companies look into tokenizing stocks, for example. Why is that beneficial when, as far as I can tell, people are trading stocks right now, seems to work fine for their purposes.
That's true. So first, I guess it depends on the geography where you live. Like obviously in the US, from the perception of an end user, trading stocks is very efficient, even though there is a lot of inefficiencies behind the scenes that the companies like Robinhood do a very good job of isolating you from. But there isn't a scenario where, tokenize stocks or tokenize other assets have more utility than the non-tokenized versions, right? You can move them around, you can transfer them easily. Like if you try to move today's stocks from Schwab to Robinhood, it's going to take you like 2 or 3 days. And if you want to borrow against them, it's going to be very difficult. And, you're not paying fees, payment for order flow behind the scene. That is something that somebody's paying for, etc. So I think that definitely stocks in the US are perceived as something very efficient, but I think there is room for improvement. But also in other geographies, there's a pure accessibility problem, right? Like how do you actually buy stocks?
We had a busy market in the crypto. It was a busy weekend in the crypto markets the past 3 days. And we should say, we booked this conversation with you weeks ago. We didn't know what was going to happen. What are people around you in your orbit talking? What are they saying about the past 3 days in crypto market movements?
I think this just shows more the benefit of what we do, right? Because what we do, as you've said, is the real world assets, right? These are not, that like a lot of these tokens that went out, these are tokens that don't have any intrinsic value, that they're just pure speculative assets, and obviously they're very liquid. And then when they go down hard, right? Like what happens on the weekend, and people get liquidated, and then it goes down faster, etc. So I think that, if anything, what we see is validating our thesis that bringing to the crypto economy real world assets that have intrinsic value and solid backing, it's actually something that more people should be considering.
Great. Well, Carlos, thank you so much for coming on the show. We really appreciate it. It's an interesting business and an interesting time for your business as well. Look, I'm not going to press you further on it, but if and when you do decide to go public, come back on the show and tell us more about your plans for the business.
You'll be one of the first ones to hear from me. You'll be one of the first ones to hear from me.
All right. Well, that is Carlos Domingo here on TITV, the founder and CEO of Securitize.
Thank you.
Okay. The talent wars have been one of the most interesting parts of the AI boom, and few people have a closer seat to these musical chairs than executive search consultants who help companies find the talent that they need. I want to bring on Chris Davis, managing partner at executive search firm Russell Reynolds Associates, to talk about what he's seeing in the market. Chris, welcome to TITV. It's great to have you.
Hey, great to see you, and thanks for having me.
I was going to say, Chris, you and I have talked a lot on the phone, but we've never actually seen each other face to face. So it's great to finally put a face to the name.
Real pleasure to see you.
We've talked a lot over the years about the musical chairs that happen in tech broadly. Look, I do want to talk about AI and the talent wars in AI. We've seen these huge pay packages being thrown around by big tech companies. At the same time, on this show, we have a lot of startup founders who are quickly attracting people from big tech companies to come join their companies. And so I wondered, as you sort of look at the market broadly for AI talent, what's your sense of, are there more people interested in working at the big tech companies right now, where there is like unlimited resources in some cases for compute? Or on the flip side, are you seeing more people move to startups and saying, look, I just can't build what I want fast enough. It's such an important time for my industry. How are you seeing that story play out?
Honestly, I think it probably just segments out like you would see in other roles where, people in a tech forward type of business, some gravitate to high growth opportunities where they want to change the world, and, the sky is the limit and it could be a unicorn. And some will say, hey, I want to really do this at scale and, transform like a legacy organization. So it does really depend. I think you tend to see different profiles, I would say, when you segment out those that gravitate to the large orgs versus the smaller ones. The smaller ones, I think, tend to be folks that are really looking to productize and commercialize the AI opportunities that you see before you, and really, take on some level of risk. Whereas I would say that folks that gravitate to the larger FIs are probably looking to maybe more incrementally transform things, perhaps drive more organizational transformation than necessarily focus as much on building new product, if that makes sense.
Right. What are the researchers looking for most? I'm sure you talk to a lot of these high profile researchers. They are the talent that everyone is after. What do they look for in so far as how they're considering their next role beyond just, hey, who's going to pay me the most?
I mean, I think really it just comes down to, the quality of the prompt engineering, the quality of, in some ways it's the curiosity too. I mean, a lot of this is technical skills, but some of it is the creative skills as well, to really think about the scope of what's possible with these models. And frankly, not just to be siloed within the world of research, but also to engage with the broader technology organization, and maybe even more importantly, the business, to say, hey, like, we could actually develop new revenue models, new business models with model ideas that we have. So I would say it's a combination of just having sort of had the track record to really understand how to prompt engineer very, very well and build these models, but also the ability to kind of engage with folks in the business to figure out, like, what is the scope of what's possible and where could we really step change our growth, or
Right.
take the cost for that matter, through creative new modeling.
Right. Do you work with folks at all in the chip ecosystem, folks that are looking for the next role there at all?
I personally don't. Some of the folks at Russell Reynolds will work with
Right.
chip manufacturers. Yeah.
And the reason I was asking the question, I wonder if you have any insight into this at all, is just the same talent wars that are playing out with the model researchers. I mean, my guess was that there are still a limited number of people that know how to design AI chips very well. I imagine that the talent war must be playing out there, and these huge pay packages must be going to those hardware engineers as well, no?
I would definitely think so. I mean, I don't really work on the hardware
Right.
side as much as the software side, so I
Right.
don't say definitively. I think at the end of the day, I mean, the talent wars are really happening in the world of AI, and they are resulting in sort of prices ratcheting up,
Right.
folks, really sort of sizing up, what are the alternatives out there, and the market's pretty fluid right now. So people are, I mean, not necessarily as loyal as they used to be. They move around quite a bit,
Right.
to the next best opportunity.
And the last question for you, I do want to talk to you about what other C-suite positions AI startups and fast-growing AI companies are looking to hire most for. I think when you and I had spoken about a year ago, we talked about the need for chief marketing officers, for example, or AI companies sort of building out their sales teams.
Right.
Are those still the C-suite positions that are highest in demand, or is it still very technical focused? Looking for CISOs in some cases, or CTOs.
I would say probably it has shifted a little bit from marketing, actually. Most definitely, the CTO role or the CIO role is one which tends to, you know, run a lot of the AI, and even some of the broader kind of AI and organizational transformation. But the other area that's really, really doing a lot of work in AI is product, right? Because
Hmm.
at the end of the day, you see a lot of investment going into AI, and one is looking for a return, and that often comes through, the commercialization of these AI use cases into products.
Hmm.
So in financial services as well as in tech or fintechs, I'd say that the product roles now, the chief product officer is very focused on, like, how do we embed AI in all the different kind of workflows? Actually, how do we AIize our products?
Hmm.
We make our products more agentic. So I would say that, maybe it's even more product than it was a year ago when we spoke.
Right.
And I would say probably product next to the CTO is what's really getting a lot of attention,
Yeah.
and getting a lot of
Well, I mean, that would certainly make sense given that OpenAI hired Fiji Simo as the CEO of applications, and that really is an acknowledgement that, hey, we have this underlying technology. We got to figure out what to actually make with it so that we have things to sell. I think it's a great point. Chris, thank you so much for coming to the show. We really appreciate it. There's going to be a lot more hiring news to come, and so I'm excited to have you back on the show to talk more about it. That is Chris Davis, a managing director, I should say, at Russell Reynolds Associates. Okay. Well, that does it for today's show. A reminder that we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. And so until then, have a great rest of your Monday. Bye-bye for now.